Hello, everyone, and welcome. Thanks a lot for checking in. Hope you had a great week and a good start to the second half of 2018. We have a special launch event here today. The Ichimoku Kinko Hayo is our new premium indicator. So we'll talk about that for the next 30 or 40 minutes or so. I will not be taking questions during the presentation here today. It's Friday evening here in Berlin and the kids are in bed, so I'm planning to make the best of it getting into the weekend here. That said, if you have any questions that come up along the way here, just type them into the chat box and I will get back to you via email sometime over the weekend. All right, that's me to the left here, Chris Lassen. I previously ran a company that focused on sentiment analysis, applying concepts from behavioral finance and looking at how emotions and psychology influence investment decisions. To the right, Ari, also known as Fat Tails, is of course quite well known throughout the Ninja Trader community and has programmed some of the most downloaded indicators for the platform. All of the ANA indicators for Ninja Trader 7 were his. And this is where you'll find the Ninja Trader 8 conversions for those tools. We have created a indicator library for those. And if you're just starting out at trading, it's a really valuable resource to find a trading method that fits your personality without having to invest hundreds, if not thousands, of dollars on indicators. So you'll find a wide range of techniques for technical analysis, including momentum, price action, volatility, volume, all well-established concepts developed by famous traders for a symbolic price. And if you're a more advanced user, you'll also find a lot of valuable tools in there, trailing stops, statistical tools. So far, we have about 100 indicators in here with many still to come. We also have a indicator spotlight newsletter that you can sign up for once a month. You will then get a monthly download to one of the library indicators with information on how to use it. And of course, we have our premium section, which is what we'll talk about today, our proprietary indicators. And today it's the Ichimoku that we'll talk about. But just one last thing before we get going here, quickly go over our disclaimer. It's not easy making it as a trader. It's a considerable risk. And just make sure that you understand that and keep in mind that the results from the examples that we're going over here today are hypothetical and not based on actual performance. All right, so today we'll look at the Ichimoku indicator, the basics, as well as how to use it in connection with a specific trading setup around the London Breakout for Forex instruments. Of course, if you watched our recent indicator spotlight, some of the terminology around the Ichimoku indicator will be familiar to you. So might be a repeat of some of the concepts there. But as I said, we're also looking at how to use this together with the London Breakout Forex strategy. It's a concept that you can also apply to other markets, commodities, index futures. Yeah, the strategy will also look at how to align the broad and intermediate bias with the short-term trading opportunities that we're looking at here. And towards the end, we'll also have a special launch offer for this. So make sure that you stick around for that. All right, let's get right into it. The indicator was developed by Goichi Husada, who published a book about this back in 1969. Looks a bit wild at the first glance. Basically, the easiest way to get your head around this is to think of it as a momentum indicator in 5 time frames. The most characteristic feature, of course, is the cloud here, the Kumo, which projects forward 26 bars. And we'll get back to this in short order. But to start off here, I will just go through the 5 time frames so that you have all the elements that we'll work with here. The one that follows price the closest is the Tenkan Sen, which is calculated using a 9-period high, adding a 9-period low, and dividing that by 2. Basically the same as what you would do to find the Donchian channel midline. It's the same line that you will get then if you apply it to a 9-bar period. And then we have the Kijun Sen. Kijun Sen applies the same calculation, but to a 26-bar period. And the relationship between the two is similar to that of a fast and a slow-moving average, as you see here. The 9-period follows the price plot pretty closely. And the 26-bar period, obviously, is slower. And so you can wait for a signal here. When you see these the fast Tenkan Sen move above the slow-moving Kijun Sen, then you have a long signal, and then when it moves back down below the slow line here, you have an exit signal. But in strong trends, these entry signals here, they occur relatively infrequently, and so you may therefore also look at how the price is interacting with these lines here. So a cross above in price on both lines might also be a trend indication, and we'll look at the trend definitions for the Ichimoku indicator here a little bit later on. So the cross here, Tenkan Kijun cross, is the typical momentum signal that we're looking at in this indicator. And then we have the Kumo, as I mentioned, it's displaced forward 26 bars. And the cloud is comprised of 2 lines, the Senko span A, which is green, and the Senko span B, which is red. And the calculation for these are as follows. So it's Senko span A is the Tenkan Sen plus the Kijun Sen divided by 2, whereas the Senko span B line is a 52-bar period high plus 52 bar period low divided by 2. And so you have a strong uptrend if the Senko span A, the green line here, is crossing the Senko span B, and it's projecting a green cloud, whereas you have a downtrend when the Senko span A drops below the Senko span B. Again, the cloud is displaced forward 26 bars, and that also provides a forecast of future support and resistance, and therefore we can use, again, price interaction with these plots as indication of what's going on here. So price interacting with the cloud here is indicating resistance, trying to get through this here. It's traded back into the cloud, which is indicating a sideways market here, and then trying to break break through it. And then once it does break through again here, then we have a uptrend again, as you see here. Whereas back here it was neutral. I'll get back a little on the specifics of the composite trend here in a little bit. And then you can see it comes back testing for support again back here. So basically, once the prices have cleared above the cloud, we have a uptrend, and if the prices are moving below the cloud, it's a downtrend. And if it's moving within the trend here, within the cloud, then it's a flat or sideways market. And finally, we have the Chico span line. This is the close displaced backwards 26 bars. It's a momentum filter, and the rule is quite simple. You have to have the Chico span on your side, meaning that you can only take a long position if the Chico span has moved above where the price was at 26 bars ago. And conversely, of course, for a short position, the Chico span has to be below the price where it was trading 26 bars ago if you're to take a short position. And there is also a long-term momentum indication when the Chico span is crossing the Kumo midline. We don't see that here because this is a pretty strong uptrend here, but we'll get back to a example of that a little bit later on as well. So what can we do with all of this in terms of trend definition? Well, the indicator allows you to define composite trend filters and display it with paint bars. So by default, we've set it to look for where the price is relative to the Kijun line. And here we see it's moving above the Kijun line here. And you then also want the Tenkan Kijun cross to have occurred. So in an uptrend, you want the Tenkan line to be above the Kijun line. So blue needs to be above the red line. And then furthermore, you want the prices to be moving above the cloud in order to be a uptrend. And here we see this as a neutral trend here with the gray and white bars. Why is that? Well, first of all, we see that this bar here is moving below the Kijun Sen, and so that is canceling out. That is a bearish indication, right? So we have a Tenkan Sen which is moving above the Kijun Sen line, so that's bullish. We have price above the cloud, that's bullish. But this one here, which is moving below the Kijun, price moving below the Kijun Sen, is a bearish, and therefore we have a composite trend that moves into neutral territory. And only when we have prices moving above the Kijun Sen, and again a Tenkan Kijun cross above here, then we have a resumption of the uptrend here. And this here, by the way, is also a thrust bar, and those are the ones that will indicate signals and a cross above the price lines here. So we see this cross above the Kijun Sen is a thrust bar, so this would generate a signal for us. It's a thrust bar because it has a close above the high of the previous bar. We have additional filters, in total 8 filters to define the trend. In addition to the ones that I just mentioned, we have the Tenkan up or down. It's how the price is interacting with the indicator line. The Kijun Sen line I already discussed as a default trend filter. And then we have the Kumo moving, the prices moving above or below it, the cloud, And we have also the midline of the cloud as a trend definition, and the Chico span line. In terms of crossover, in addition to the Tenkan Kijun cross, we also have the Senko cross, which is the forward projecting cloud trend definition. And we also have the long-term momentum when the Chico span is moving above the Kumo midline. In addition to these trend filters, we have trade signals, as I mentioned, based on the composite trend and thrust bars, also price action, defined with these trend filters. And we also have trade alerts in the log and the sound files. Finally, there is a opportunity to use all of this together with the NinjaTrader Market Analyzer, so you can scan for signals as well as trends using that tool. Next, we'll have a look at how to qualify the Ichimoku signals using the strategy approach centered around the London Breakout. As mentioned earlier, we then look at the high and the low points that is set during the final hours of the Asian session leading into the EU pre-session. So it's a 3-hour time window from 5 in the morning Central European time until 8 o'clock when the markets in Frankfurt open. We're using the opening range indicator to define the high and the low areas of this range. And we're looking for Ichimoku signals at the breakout. But just as an aside here, of course, it's known as the London Breakout, but it looks as if there's more and more activity now at the Frankfurt Open. I don't know if it has anything to do with the Brexit negotiations and the financial industry moving towards the continent, but yeah, that's 1 hour earlier than the traditional London Open in Frankfurt here. And yeah, this opening range, or this range, 3-hour range, will also then define stop loss and profit target levels for us. So we'll have a look at how to do this now coming up here. This is a 5-minute chart of the 6E contract, the Euro futures contract. And the blue area here is the 3-hour time period high and low levels. So 5 o'clock local time here, 8 o'clock local time here. So this is the time span we're looking for. A low level here, a high level here, and then we're seeing a breakout here. This is the thrust bar that I pointed out earlier. So we're breaking out of the opening range high level here, and that is where we would enter the trade. The stop loss would then be set just below the range low level, and the target, the first target that we would go for, is the range extension. So this is 1 multiple, 2 multiple range extensions of the range that we're seeing here. So pretty easy strategy concept here. We're looking at the range high and low points for the 3-hour window leading up to the Frankfurt Open. We're qualifying the breakout with the Ichimoku signals, and we're setting the targets and stop loss based on the range here. Next, I want to talk a little bit about how to qualify this setup using a bigger picture. So the general idea here is to align the broad and intermediate perspective with what we have seen in the short term to improve our odds. So traditionally, of course, anything more than 6 months was considered a broad perspective, intermediate between 3 weeks and 3 months, and short term, anything less than 3 weeks. But I think for intraday trading, we can consider something as short as 3 to 5 days to get a broad overview of whether there has been a major move or if the market is range bound. And the intermediate will then be the last 24 hours or so, and we're looking to time the entries with anything less than 5-minute charts, alternatively low resolution tick volume or range chart. So many of you will be familiar with the volume weighted average price package or indicator, the VWAP, and it is of course an important institutional price mark. But when we're talking about Forex or cryptocurrencies, they are not traded at centrally located exchanges. So volume data is either not correctly represented by the underlying market, or it is unavailable. But fortunately, volatility is roughly proportional to the square root of volume. So you can mirror a volume weighted average by using the squared ranges as a weighting factor here. And the resulting standard deviation bands here of the range weighted average price can be used to reveal dynamic support, resistance levels, as well as institutional participation. And in a broad perspective, I like to have a look at a 240-minute chart or 4-hour chart with the monthly range weighted average price. And you see here, this was a pretty strong downtrend last month in the 6C. So we have a red RWAP line here signaling a downtrend. And then we see the standard deviations here. This is the lower first standard deviation, second standard deviation, and third standard deviation. And we also have mid bands here. As in the monthly perspective, the distance between these standard deviation bands can be quite wide. And you see here that the mid bands act here as dynamic resistance here, and so these come in quite handy when you're looking for retracements into value. We have traditional value here, but these retracements don't make it further up than the 1.5 standard deviation here. So mid bands are quite handy in these higher time frames. For this month, we see a blue range weighted average price indicating a uptrend, consolidation, or retracement of this big move that we had here in the prior month. But we're still in the value area here of the previous month. The value area is defined as the upper standard deviation, the lower standard deviation. And so this gray area here is telling us that we're moving in the prior month value area. So definitely a consolidation here. Once you move out of the value area, high or low, then you can be considered to be in a trending market again. As you see here, I also have a monthly Fibonacci extension levels added here. So there's a interesting confluence here between the monthly range weighted average price of the prior month and the 50 retracement here. You see there's been several attempts to break this here, and we've had testing support here at the beginning of the session at the prior month value area low. So you can see how this can be used to identify both the broad trend that we're moving in, as well as key support and resistance levels. For the intermediate perspective, I then like to have a look at a 30-minute chart of the weekly range weighted average price. I also have the weekly Fibonacci extensions on this. And we see a confirmation of what we saw in the broad overview here. We've moved within the prior week value here for most of the days, trying to break out here to the upside, coming back in, testing the prior week RVAP here, again here. Then there is a Fibonacci extension 61.8 here and here, and the value area low here. And yeah, these are of course then support levels. This is then resistance, and things are starting to get interesting here as we see a breakout from the prior week value area high here, also setting a new high for the week, and look to be going for the prior week high here. Again, the idea here is to align the broad overview with the intermediate perspective and use that for improving our odds in the short term. So you can see here why we would not want to look for breakouts to the downside based on what we found in the broad and intermediate perspective here. And now we'll have a look at a example for a short trade. Again, it's a 5-minute chart of the 6E contract. So this is the following day, today, Friday, and we have the pre-session range here starting at 5, going until 8. We see the high and the low points were set just before the conclusion of this time window. And then right after the Frankfurt opened, we saw a thrust bar out here, but it was not crossing any of these significant lines here in the Ichimoku, so we did not get a signal on this bar. We did, however, on this one. This one created a signal for us at the breakout, and a stop loss is then set above here. And a first target was hit here at the multiple of the range itself. All right, so have a look at the broad perspective for this. So the short setup was confirmed by a monthly downtrend, which, as you see here, got off to a very quick start here after what we saw previously here. And yeah, just blew through everything that we had of support here. In reality, there is no technical analysis or technical level that will be able to stop a central banker that comes out and starts signaling on rate increases. So this is Draghi yesterday talking about when the rate increases are going to occur here in Europe. And as you see from the market here, it looks like it's still a ways off. So very much turned into a downtrending market very quickly, breaking out of this prior month value area low here and looking to take out the prior month low down here. Same story for the intermediate perspective, of course. We see that the prior week high was actually hit here before going into a nosedive and going through all the support levels. A little bit of a hesitation here at the prior week low and the RVAP level of 2 weeks ago. And then going all the way down to the 161.8 extension. In other words, not a scenario where we're looking for upsides or bullish breakouts. Although there is a good chance that when you see 161.8 level in conjunction with the third standard deviation of the weekly range weighted average price, could be oversold here and a good place to look for reversal patterns, but that will be a topic for a different presentation, I think. For now, I'll just quickly go over what we've prepared for you here today. We have a special Ichimoku launch bundle prepared where we have the opening range, the session VWAP package, as well as the Ichimoku indicator, of course. And as I said, this setup can be used not only for the London Breakout setup, but also other opening range setups in different time frames, time zones, different commodities, and index futures. But before I get into the specifics of the bundle here, I'm going to mention 2 bonus specials here that we have with the launch event. For the first 5 registrants, I'm going to offer free one-on-one consultations, and we can customize this according to your needs, of course. Some of you would like to have this set up on your machine, taking care of the install process, workspaces, everything that goes along with that, so you're ready to go. Or we can talk about customizing this to your current trading style, or just go through general inquiries, whatever questions you may have on our indicators or on our approach in general. Secondly, you also have a free membership to our indicator library for NinjaTrader 8. As I said, we already have about 100 indicators in here, and that's where you find all the ANA indicator conversions for NinjaTrader 8. They're now called AMA, AMA. And yeah, there's a lot of things happening in the library with constant new additions to it. We just added the Fibonacci extensions that I've shown you here today. We also have what used to be called the noise bands, now they're called range projections, added in here, and trailing stops, lots of good stuff in here. So it's definitely a valuable tool for you to have in your toolbox. There are also a couple of newly released indicators that weren't available for NinjaTrader 7. The efficiency ratio, for example, is in here. And also, as a member, you will get a discount on any future premium indicator releases, including invitation to pre-launch specials. All right, so everything that we talked about regarding the Ichimoku, the opening range, the session VWAP package, the consulting session, the NinjaTrader 8 library is in the launch bundle here. Normal price for this is just north of $900. So at $695 here, you get a pretty sweet discount today. The VWAP package here is quite extensive. We have the monthly and the weekly indicators that I've shown you of the range weighted average price, but of course you have the daily calculation as well for both the range weighted average price and the volume weighted average price. We have quarterly calculations as well, and we have a rolling VWAP and range weighted average price that will come out very soon as included in this package. All right, so this is where you go to get the special promotion for this event. lizardindicators.com/IKH. That stands for Ichimoku Kinko Hayo, of course. We'll have this up for a couple of days here. So if it's something that you're considering, head on over to lizardindicators.com/IKH to check it out. All right, so with that, I'm going to wrap up the presentation here today. I see there's a couple of questions here, and I will get back to you on those via email very soon. And if you have any additional questions, you can always reach out to me via the contact form over at lizardindicators.com. Otherwise, at info@lizardindicators.com. Thanks a lot for checking in. I hope it's been of value to you guys, and I look forward to hearing from you sometime soon. Take care and bye-bye.